Investors and traders, welcome to the channel. Market chart pattern today is 26th of May 2024. I hope everyone is having a great weekend, and those of let's say subscribers who are in the United States, United Kingdom, I hope everyone is having a good long weekend. So in this video segment, we'll be taking a look at the key US markets. We'll be covering the dollar index. We will also take a look at the bond market through the eyes of the treasury notes and futures, mainly the futures market. Gold and silver I will not be covering in this video because I've already done a separate video, so I'll just point you guys to actually watch that. And then a brief look at the foreign markets such as FTSE 100 and DAX, and then we will begin to take a look at the US sectors, which will be energy, financials, not a big deep dive into the financials because the video has been done for the financial sectors, housing, consumer discretionary, transport, utilities. We'll also take a look at the staples and the semiconductors through the eyes of the SOX. And then the deeper dive into the US stock indices, S&P 500, NASDAQ 100, Dow Jones, and Russell 2000 through the eyes of the respective cash markets and their futures. And if you stick till the end, I will also talk about the weekly range to be expected for next week, and I'll also put this information in the description for you guys to have a look. So thank you for watching this one. Okay, so we'll start by taking a look at the dollar index. This is a weekly chart, and our view is that 107 has been a pretty strong resistance, a pretty strong top level for us, and we have seen a double top formation taking place at 107. So our view is that actually dollar index or the dollar is likely to weaken against a basket of currencies. And what we have seen is that we have seen a rally which took us to about 106.36. There was a chance it could actually go and challenge the 107, but that has not happened for about a month now. And it looks like on the daily charts, which we'll just review now, that perhaps the chances of it going back to 107 are getting reduced. However, it is still finding some support coming in from that 20-week moving average, which came in last week, and as the week before last week. And last week, what we have seen an inside bar formation with some strength in the US dollar. However, these charts are really interesting when we begin to take a look at the daily charts. And we'll just do that straight away. And what we can see is, here we go, we have seen selling pressure come in last Friday because of 38.2% retracement, and also 20-week 20 period moving average on the daily chart. So it is expected that perhaps it'll just come back and find some further support from 200-day period moving average, but the ABCD points to a little lower around 103.60, which will also be at the bottom of this range. So this is what our view is, that ever since it filled this gap in, the dollar has actually been weakening. So a weaker dollar would be good for metals as well as just gold and silver. Now if we were to take a look at the Euro USD, while we are on this chart, if it begins to close above the 20 period moving average, the 20-day moving average, then the chances are the dollar strength is coming back, and then it could go and test these highs. So that possibility remains there. However, our view is that weakness in the US dollar, but of course technical analysis will look at what the charts are telling us, what the market is telling us, and if things were to change, we'll evaluate and change ourselves accordingly. Now if we were to take a look at Euro USD, is the daily chart. It's really interesting because what we can see is look, the euro had a pretty nice support and a bullish day coming right from this level around here, which I believe is around 38.2% retracement from memory, and now it is in this tight channel formation, which looks like a bull channel. So if it begins to close above this, then it's gonna go and target these highs higher, and we have this gap formation. Let me actually bring this up to you guys, what this gap is. Here we go. So it's gonna go and target these highs, and maybe also begin to take these highs out, which will be really positive if it's able to get above 110. So that's what we are looking at in the Euro USD. Now we'll go and evaluate the yields. So let's take a look at the 2-year treasury note. So last Friday we already covered this, so let's take a look at it on a weekly chart. And on the weekly chart, what we see is, a up week close, so there is some strength coming in the shorter end of the curve. 5% remains a key level, so I think we have to we really need to keep on watching the yields, and once it begins to close below this 20-week moving average, then we can say, yeah, maybe there's gonna be a sharper or sustained decline, and eventually we can reach that 3.9% level that we have been watching for. And if we were to take a look at this on the longer term weekly chart of 30-year bond futures, as a long bond futures, it has found a great deal of support from 61.8% retracement. Now not the last week but the week before, it got capped through the 20-week moving average, and last week was a inside bar formation. It was able to get above the top of this, which comes in around, here we go, 118.23. So it closes a good close above it. That's gonna be pretty good for the higher prices to come in the long bond futures. In other words, yields moving lower, and which would be another step towards this pattern that we had been watching for on the daily chart, that we might in fact be moving in this CD leg higher, which can see the price move fairly high. In other words, yields moving much lower, but still in the context of an overall bear market, and the chances are that the interest rates may keep on rising higher in a secular fashion. Okay, so after covering this, gold and silver, there's a separate video about it, and really briefly we'll take a look at the foreign markets, but on the longer chart. So that's the weekly chart for FTSE 100. We can see that FTSE, it broke out of this consolidation. We can talk about this one more like a triangle formation. It broke out of it the month of February, but it's just been consolidating for a very long time like this. And we also have elections coming up on 4th of July in the United Kingdom. These are the general national elections, which happen every 5 years. So it'll be interesting how this market will trade, but there is certainly a lot of strength in this. The price is above the 20-period moving average, which is 20-week moving average, which is above the 200-week moving average. So certainly it's been a nice trend higher, and the chances are it's likely to move higher. And it was just like a consolidation week after having 1, 2, 3 consecutive weekly gains in the market. And if we were to take a look at German DAX, the German DAX also looks pretty strong on the weekly basis, and the last couple of weeks have been just a consolidation in this really big bullish bar. So here, look where the 20-week moving average is fairly below that, and that's where 200-period moving average is. So again, a fairly strong looking chart in my opinion. And then we'll now move towards the sector. So let's take a look at XLE, which is for the energy sector. And I think I'm gonna move down to the daily chart for this. And what we were discussing about this one was this 9130 is really a key support level for the energy sector. Because that's also the 38.2% retracement, and we have this ABCD completing here. Moving below this, in my opinion, is actually bearish, and we have this 200-period moving average around 88.25 currently. That could be a target as low as the 61.8% retracement. So the energy, although what we see going around geopolitically, all those tensions, but looks like the price for the crude oil is likely to move lower. So the energy looks actually weaker, in my opinion. And if we just have a very quick look at the XLF financials, now I'm not looking at KRE, which is the regional banking index. This is the financials. It had a pullback a little bit, and looks like it might be one and done. And taking a look at this on the weekly chart, we could be expecting higher prices. So I will not go into the details of this one because there is a separate dedicated video for this one already, and I would encourage you to watch that one on the channel done recently over the weekend. Now this is the Philadelphia Housing Index, and here this one, you can see it's gonna make an internal high. So it could in fact be in an ABCD pattern to 642, but certainly there's a possibility that this top is a pretty good top, but we'll keep on watching this because um, the price is still above 200 period moving average, but it closed below 20, so it's kind of giving a little bit of a mixed signal on momentum. So we'll just keep on watching this one. It just shows that ever since the expectation for lower rates came in, it just had a nice bump higher, but now we are just in a trading range situation to resolve. And if we take the XLY, which is the consumer discretionary, what we see is there was a sharp decline last Thursday and inside bar formation on Friday, but it still doesn't look that great in terms of a chart, and there's a potential for a head and shoulder pattern here, left shoulder, head, and right shoulder, and there seems to be a pretty good symmetry between these two as well, depending upon how you draw. So let me try drawing it right here. If we just take these highs and this as being the head, and if we just push it right here, so you can see there's pretty good symmetry between the left shoulder, the head, and then the right shoulder with respect to the head. It is something I like to see, but it's really in a trading range essentially. So you look at this one like this. It's not drawing the box here. So there we go. So it's a big trading range because the price is kind of squeezed between 200-day moving average and 20-day moving average. So moving below the 200-day moving average and breaking below this box is gonna be pretty negative. Then it'll be a confirmation we are in an ABCD move lower, which can then come and close this gap around here. But it's just this chart is telling us that the consumer discretionary market is under a bit of a stress, where the consumer might be holding off purchasing a lot of discretionary items. So those companies which are in production of such items are obviously impacted through this. And if we take a look at the consumer staples XLP, so you can see the consumer staples is looking much better because that's the kind of things people will need. And in fact, it's just it came very close to these highs around here. But if you just look at this entire period, it's just a big massive trading range. Here we go, look at this, it's just a massive trading range. So eventually it will resolve to one of these sides, but what we can see ever since the expectation for lower rates came in as a possibility, this one moved really higher. Now the expectation for Federal Reserve to cut the rates in June have been pared back, or maybe even September, and the amount of rate cuts they were going to do for 2024 back in October 23, those have not happened yet. This one has still relatively held much better compared to such as the consumer discretionary. So because these are the kind of items which are needed, so it's just had a modest pullback here right to the 20 period moving average, and the price remains above 20 period moving average, which is above 200-day moving average. So it looks the price looks much better. There is a possibility it could pull back a little bit further towards this structural support and 38.2% retracement. Okay, and if we take a look at the Dow transporters, they don't look that great, but we discussed about this one in last weekend's video, and yeah, it's just possible that we are seeing some slowdown which we saw through discretionary items. Maybe it's just a part of the reflection of the kind of economy we are in, where some rotation has happened, because if you look at going back to this period of 2020 to 2021 around here, these were just skyrocketing, and after that they have gone into a massive range. I would just call it a range bound market. I wouldn't really I'm not really too concerned about this, because I think there's the kind of economy we might be in is more rotational, because that's the point. Because of the stimulus, people were at home, they were buying a lot of products, and those products need transportation. So we saw this thing skyrocketing, and here, especially in 2023, when the economies were returning with the start of the post-pandemic era, a lot of things which are associated with services or experiences like hotels, travel, etc., that picked up. So maybe it's just that kind of rotation. So I just see it in a very long range. And in fact, it could also be argued that we have an inverse head and shoulder. Here we go. So if we take this and we just copy this and bring it around here, so we have a very nice symmetry here. So head, we make it in capitals, and we have a left shoulder, and then a right shoulder being formed around here. And this is just a big massive range, and also we can draw a trend line like this. So yeah, I mean, this market is just chugging along. It's just in a big massive range, in my opinion. Now we'll take a look at the semiconductors through the eyes of Philadelphia Semiconductor Index. Here we go. So this one is really important, because look, semiconductors are really important because they're used in the chips are being manufactured, which are chips are used in so many things. You name it, all electronics, cars, they need it, many things. Really important, right? And that's why we have seen a really nice move in this market. Momentum remains amazingly strong. Price way above 20 period moving average, which is way above 200 period moving average. And in my opinion, I think we are in this leg higher, where we can go and basically target. This is shorter term I'm talking about, by the way. 54,670 and 57,90. This is what we are looking at shorter term. But in fact, we might be in these bigger ABCD higher, where we have several of these. And we could have higher targets as well, but this is one bullish market to me. So semiconductors, they look pretty good on the daily chart. On the weekly chart, what we can see is it completed a big ABCD around here, and a pullback. I'm not even sure. It looks like a 38.2% retracement, and this is exactly what it is, a 38.2% retracement, which happened the week of 19th of April, when the markets actually bottomed, the broader markets. And now what we see is the market is rebounding. So I think it's just starting its the next leg higher, and we could have another ABCD higher as well. So the one which I drew was through these pandemic lows, and I think it did cause a bit of a pullback. And now what we are seeing is a resumption. Yeah, I mean, the targets that we see on the daily chart, I think shorter term, those are achievable. So semiconductors, this index remains bullish, which means that stocks which are related to growth stocks, related to semiconductors, chips, etc., like Nvidia, there are a few other, AMD, they can perhaps also do well out of it. Okay, now what we'll do is we'll take a look at the individual stock indices, and we'll start by taking a look at the S&P 500, and I'll move to the weekly chart straight away, because last Friday we had a look at the daily charts. So one thing that I would like to point out is it is a bull market. Look at this bull trend from March of 2020. This line is still intact. So we had a correction which was about 4.9% 5.9% or 5.8%. And what we have seen is that actually market go and make a new high, so it is extending. We do have some targets. We have this expansion, excuse me, this black cycle ABCD extending its D leg. So here we go. Let me extend it like this by 1.618. That comes at 53.94. And above that, we have the 1.618 expansion at 56.50, which is the entire decline of this 2022 bear market. And we could in fact be in this bigger ABCD, which will take us much higher. But this is what we are watching for now. So the chances for it to get around to 53.94 and eventually 56.51 are actually there. So what could happen is that maybe because we are still in that timing period, and I'll just show you that timing chart, we could have a few additional days of some pullback, or maybe just range bound behavior, at least on the weekly chart. And then we'll just have to wait for the timing to be over. And we are getting pretty close to that. So actually, let's just quickly take a look at the daily charts. On the daily charts, we were watching for these kind of levels. And let me show you what I mean on the timing chart. So this is going to be the cash Dow Jones Industrial Cash Market. And we have some timing which came in between 24th of May to 29th of May, and with timing we have to give it 2 to 3 trading days on either side. So we are still in that period, which will most likely end towards the end of May. So next week is really key, and we have already seen some pullback come in, but also we are reaching towards the end of the time window, and with Monday being a holiday, we will have a shortened trading week next week. So this is what we were talking about in terms of the timing. Now moving back to the ES, this is the S&P 500 futures, and what do we see here? This has also gone to a new high, and on weekly chart we can go and see 55.70. That is certainly possible, and that proved to be, maybe let's see what sort of expansion we might get from this shorter term swing. Yeah, looks like that's going to be very interesting, because we have a confluence of two 1.618 expansions coming from, one from this smaller swing, and this one is of course this larger one. So I believe that 55.65, 55.70 is going to be a really key level, and we might see that being a pretty strong resistance level as well. So that is one possibility. However, if we are able to get above this, then we could have an ABCD where it's moving higher. In fact, one ABCD situation which I think might have drawn on the daily chart, if we were to do this, and this was just a one-day pullback here, that also takes us to around 54.35. So that is also likely to be at least a minor resistance level. When I say resistance level, I mean that the market can pause over there, maybe go into trading range for a few days, pull back a little bit, and then when it is a really big one, we could see a bigger correction starting. So we'll just pay really close attention to around 55.60 to 55.70 level. That's going to be really interesting, and these are the shorter term Ethereum levels we should be watching. Okay, now moving back to the daily chart, and also the momentum is pretty strong. You can see this price is about 20-week moving average, and 200-week moving average is way below. So momentum is pretty strong on this chart. Here, if we were to talk about what we saw in last Thursday, the chances are that it was just a one and done situation, and that was also the kind of the time period we were moving into timing around that day. So that's 23rd of May. So 24th of May is kind of when the window was starting, with the 2 to 3 trading days on either side. So the chances are, I think, we move higher, and it might just have been a one and done. And also I don't know how much attention you pay to these daily ranges and weekly ranges that I put for you guys, but if you were to look at those, and if you were to watch for the +1 standard deviation levels, you would have noticed that we were very close to those standard deviation levels as well on S&P 500 and also NASDAQ 100. Now let's take a look at the NASDAQ 100. Let me move on to the weekly chart. Here we go. Again here we move higher, so we remain in that bull market. I'm going to remove this because what we saw was about 8.5% correction here, and here we go. So we have bigger ABCDs completing around 20,700, 20,000. These levels are going to be really important, and if I were to draw a expansion level of this, yeah, we'll have some intermediate how to put it, mild resistance levels at 1.272 and 1.618, but the bigger one is this big one. We'll have an ABCD completing, we'll have 1.618 around 20,800. So anywhere between 20,700 to 20,800 is we'll be paying really close attention to, because we'll be getting at least on the NASDAQ, which has been a leader in the growth stocks, we'll be reaching some clear pattern completion levels around there. It doesn't mean that we start a big bear market. It just means that the kind of targets that we would typically watch for, those have been accomplished, and now start paying attention to the price action, try to decipher what the price is telling us, the direction it might go into, and it might just go into a trading range, higher consolidation, then break out higher, or we have a bit of a pullback. Also the possibilities remain on the table. Let's take a look at the QQQ. Okay, so this is the weekly chart of QQQ, and now it looks like the QQQ wants to go to 1.618504 level around here, but meanwhile it is going to have it's a 1.272 is already there, 471 shorter term target, and eventually I think around 500 is where it wants to go. Now I'll try to be a little bit quick, and we just take a look at the Dow Jones. Okay, so the Dow Jones is really interesting because not a very convincing looking close, and did not take these highs out either, but it still remains above the 20-week moving average. And what we're thinking about is that maybe on the daily chart it was just one and done, so it's still got a chance to go and hit 41158. And let's take a look at on the daily chart. What we can see is it closed right at the 38.2% retracement, and what we also looked at so this one is something we need to pay attention to and watch Dow Jones really carefully how it is moving. So this one doesn't look a very nice looking chart. The other ones have had a inside bar. This one not really. Okay, and then if we take a look at the Russell 2000. Okay, so really interesting development on the daily chart, finding support from 38.2% and inside bar, and on the weekly chart it just keeps on finding support. This is the 20-week moving average, so really watching for a close above this. If it is really bullish, getting above this, I think then it can go hit and for 22.32, and then even higher. The really important thing is that we have this possible ABCD in the red, but the real key is that this 38.2% retracement, that remains to hold. This is 38.2 of this one, and it's a double bottom here around of these two as well. So here it's just a big massive trading range, and this is what this index really likes to do. It just goes into massive trading ranges. So we need to wait for this to resolve either way, but the chances are, because of the momentum, price above 20 period moving average, which is above 200-week moving average, it resolves to the upside. So the shorter term target will be 2232, 2318, and really key is that this 1922 remains intact, If it gets broken and this pattern is negated, then we'll have to look at it in a different way. So thank you very much for watching the video. Good luck, good trading. If you found this video of educational value, give it a thumbs up. And if you like how we do the analysis, look at the markets using pattern recognition and Fibonacci expansions, ratios, retracements, extensions, projections, then please do subscribe to the channel. Thank you very much. Good luck, good trading, and speak to you guys soon. And have a great weekend.